Hello traders, in today's video I'm going to be giving you guys a scalping short-term strategy that you can use for free. I say for free because the tool that you're looking at to scan for this is all free. This is CryptoWatch desktop, and you can get this on Windows or on your Mac for free. Now to set this up, because before we talk about really what this is, I know a lot of you are going to have questions on how to set this up. You go to here, board management, you click new board, so such as like, let me get rid of this one and re-add it. You click new board, so I'll type in BTC. You click add, configure, depth chart. And then let's do, I'll do FTT. You do whatever coin you want to look at, and this is the way I like to look at it. Okay, and there is your depth chart. And then if you want to add more, you click this, and you can add more. That is how you set this up, guys. And that's how I have a beautiful kind of Bloomberg kind of looking setup right here. Now, I'm actually going to go back to this one to talk to you guys about the strategy, with a better view, as you can see here. So green are orders to buy. This is a 1% depth chart, meaning that it takes the market price and it looks 1% below for all of the limit buy orders, and it looks 1% above for all the limit sell orders. Now on this depth chart, red are limit orders to sell, FTT, which is the coin in question, and green are limit orders to buy. Now let's talk about the depth or the change in elevation that you're looking at. A large sideways line, kind of like what we see here, if you can see what I'm highlighting. From this guy, from about 42.37 in liquidity, or in how many FTT is trying to be bought, to here, that's a large bid wall. Now that large bid wall is currently at the price of 47.22. So we know that there's a decently large bid wall at about 47.2, 47.22. Got it? Why are bid walls and offer walls so special? Why do we want to look for massive walls, and what can we do to make a fair amount of money fairly quickly and relatively safely? You're in the right place. Welcome to the wall buster strategy that I will teach you. Now, before we talk about how to trade this, I'm going to talk about why price tends to do one of two things when we're talking about a large order wall. Imagine that on FTT, you have a 10K USD worth bid order, and then right below that, you have another 10K, bid order, blah, blah, blah. Lots of tiny limit buy orders. Then you have a $5 million order. What tends to happen with that $5 million order? Well, one of two things is very likely going to happen, or 99.9% of the time, if not higher, is going to happen. Either price respects it and just doesn't touch it, or just partially fills that wall a little bit, or price fills it and then tanks if it's a large buy order. Why does price tank after filling a $5 million buy order? Here are the reasons why. Reason number one, the price tends to shoot past walls. I have my notes on a little board here. Is that stop losses. A lot of traders who know how to trade the order book and how to trade depth charts have been taught something that's not exactly a bad strategy, but it's exploitable, which might make it a bad strategy. Many people have been told that if there's a large bid, like a $5 million buy order, put your stop loss right behind it. So if there's a large bid at 47, put your stop loss at 46.95. Because a lot of people are going to put their stop losses right behind a large bid wall, when price kills that bid wall or fills that bid wall, what happens to those stop losses? They get triggered and you sell off lower. That's the first reason why price tends to shoot below a bid wall. Second reason, or shoot above an offer wall, because then it would be short stop losses right above that offer wall, trying to be protected. Second reason is order slippage. This is a fun one. Imagine that that $5 million buy order that we were talking about at the price of 47. It's beginning to get filled, and there is only $500,000 worth of liquidity at 47 now, meaning that 4.5 million have been market sold on. Got it? Now let's say that a trader makes a mistake and puts in a $1 million market sell order because on his monitor, he thought that bid wall had, $2 million in liquidity. Because he just sold 1 million on a $500,000 wall, of course, 500K of that wall will sell, and then the rest of his 500K order is going to just sell off at any liquidity below, which is going to tank the price a lot lower. Okay, so that is called slippage, massive order slippage or large market order slippage. The third reason is the second best reason. There's 4 reasons why this happens, and I'm going to summarize them too, so you don't forget. The third reason is the second most important, which is liquidity behind order walls. Liquidity tends to run pretty thin behind a large order wall, but behind a large bid wall. What I mean by that is if there's a massive, massive bid wall at the price of $47, it doesn't really make sense for a lot of traders to try to place buy orders at 46.9 or 46.95. Why? Well, I mean, they probably think, why would I want to place my bid right behind a massively large bid? Because it just doesn't make sense. Because if that massively $5 million bid gets filled at 47, price is probably going to sell off a lot lower. So because of that, what traders tend to do is they tend to try to front run. And a little bit of front running can be seen right here on this depth chart. Let me show you. So you can see that there is that massive wall at about 47.1, 47.09. How big is that wall? Well, let's see here. These numbers that you see, guys, the bottom number, I know it keeps like jumping around. I can't control that. But the bottom number is the USD value worth of buying or selling at a cumulative worth of buying or selling at a given price point. So what we can see here, it's not really letting me scroll. Oh, perfect. I can actually see it on the x-axis right here. You can see that the amount of FTT being limit bought goes from about 14, jump around so much, it's like really straining my patience here. It's about 8,000 FTT. So about 8,000 FTT is trying to be limit bought at one price. Got it? Why is that important? Well, look at this kind of step ladder formation here. That's other traders putting their bids right in front of that large 8,000 FTT order. That's because people tend to put their liquidity in front of large order walls and not behind. You can see there's really not much liquidity behind that order at all because it doesn't make much sense. Why is that important? Let's bring it back. It's important because what that means is because there's such thin liquidity behind an order wall, when that order wall gets filled, there's not much other stuff, many other bids to prevent price from going lower. So if all of the liquidity is here, and the market sells off at 47 and goes below to 46.95, stop losses get hit, order slippage, and then also there just aren't that many bids right behind 47, causing price to tank. Fourth reason, and the most important reason by far, why does price shoot past offer walls, shoot past bid walls and sell off into bid walls, or buy off into offer walls, large limit sell orders? Supply demand peaking. Supply demand peaking, what does that mean? Supply is peaking when there is a massive amount of selling at one price. That's what I mean in this context of supply peaking. If there's $5 million worth of market selling happening at one price on a massive bid wall, then there's a pretty good sense in the market that a lot of people want to sell. And that means that supply and sell side supply is very high, which means that it's likely the price is going to go at least a little lower. As much as people who put up these $10 million walls want to have happen, they don't always just get filled and then price rebounds. That does happen from time to time, but typically if price is going to rebound, it's going to wick and then go back. And we can take advantage of that wick, and we'll talk about that later. Now let's talk about demand peaking. When there's a large offer wall, and this is a perfect example because look at the 47.5. At the price of 47.5 on FTT, you can see that large horizontal line. See it? That's a large offer wall. That's a large limit sell order for FTT. Now, what can end up happening is if there is that much buying at 47.5, demand's probably pretty high. If that many people are just buying up 47.5, I mean, it's reasonable to believe that price will probably at least go to 47.51, 52. You get the point because of how much demand there is at that price. So what are the four reasons that order walls, when broken, I'm not saying that they will always get filled. I do not want you to think that. No. When they are broken, when they are completely filled and not pulled, they have to be filled for this strategy. That's really important. Really, really important. When order walls get filled, price tends to go past them because of stop losses behind order walls, order slippage of traders trying to hit the wall and failing, thin liquidity behind the order wall, and supply demand peaking. Those are the four reasons. How do we take advantage? That's why you're here. The first thing I want to tell you is that this strategy is very, very short term. So you do have to be very careful and you have to have a very careful risk management. Also, you always with this strategy need to be watching Bitcoin because the crux of this strategy is basically as follows. I'll explain it in 30 seconds. Let's say that Bitcoin and many other altcoins have just fallen 0.5%, or Bitcoin fell 0.5% and many altcoins have fallen. Okay, now let's say that there's a massive bid wall that's propping up a certain coin. In this case, let's say that that coin is Alice, which is the top left one right here. Let's say there's a massive bid wall on Alice and then just price is just not going lower. But every other altcoin has. This is a wonderful, beautiful, beautiful scenario to be in, because the way that I've been able to make good money pretty consistently is if every other coin has fallen and the only reason why this coin hasn't fallen is because of a bid wall, what you can do, and not financial advice of course, is you want to be one of the last sellers on the wall. So imagine that a bid wall goes from 10,000 Alice, which would be about $190,000. Not that much, but whatever. Let's say it goes from that to 500. If you sell that last 500, you know that A, the wall has just been broken, and then B, you can enjoy that quick sell-off that happens, even though you sold at the better price. So being the one to break a wall can be a very effective strategy to begin to trigger people's stop losses, trigger, what else? To trigger price hitting thin liquidity. And the kind of strategy that I've been using is this. Let's say that 90% of a order wall has been hit. I want to be one of the last ones to break that wall, and then I spread my bids just a little bit lower, below where I had sold, and almost always price just shoots right down and fills all my bids. Like every single time it happens, just goes right down. The only time I lost money with this strategy was when the wall didn't break. When I was like, okay, there's 2,000 Alice left in this bid wall. Okay, I want to short it. But then I short 500 and there's 1,500 Alice left and the price goes up because the wall never broke. You have to be either the one to break the wall or very, very, very close to that wall breaking. Now, I hope that that makes sense with looking at offer walls and bid walls and how they break, but you do need to make sure that the wall breaks. But the most important part that I don't think I've stressed enough is Bitcoin. If Bitcoin falls a lot, then other alts will probably follow. And that's the kind of situation you want to be in to short on a bid wall. However, if there's just a random bid wall, let's say like right here, and the market's kind of, and some altcoins kind of beginning to test it, that's probably not great to sell on that bid wall, even to try to break the wall. I mean, it can work, but the issue with that is if Bitcoin's flat or going up and that altcoin's selling into a wall, don't do it. It just doesn't seem like a good idea because altcoins tend to follow Bitcoin anyway, and that's why a wall buster strategy tends to be so good, is because if some wall is holding back an altcoin, once that wall breaks, that coin will probably fall in line with other altcoins and with Bitcoin. And also because of stop losses and thin liquidity, price will probably rocket right past that wall, whether it's an offer wall or a bid wall. So you always, always, always need to watch the king of all coins, this guy, Bitcoin. And I actually have a little tick chart here that kind of shows me very, very, very short-term metrics on it. Now, let's put this into practice. I'll actually use wall screener 2 that I've set up. Let's go look if there's any good bid walls or any good offer walls that we can trade. I don't think that in this video there will be because you kind of have to wait around for them. And I also don't want this video to be too long. But what I do see is ADA Cardano has a decently good wall here. So if Bitcoin begins to sell off, and ADA can't fall, then of course I'd want to sell on that wall of around 2.72. Now I know a lot of traders are going to probably be like, wait, selling into large bid walls and buying into large offer walls, doesn't that seem suicidal? Well, the thing is, what I've found in the past few years is that a lot of strategies that seem like, a lot of strategies that people tell you to do tend to fail. And a lot of things that people tend to tell you just not to do tend to succeed. That's because kind of doing this is doing a lot more opposite of what other people will be doing. What are other people doing? They're probably trying to front run or put bids right in front of a bid wall and then put their stop loss right behind the bid wall. What am I doing? I'm selling the bid wall, hitting their stop loss, and then buying lower. These kinds of strategies are very unorthodox. And if you're not comfortable doing something very off the beaten path, this is definitely not the strategy for you. This is just me showcasing something that I have been doing, and by no means you should do it. And if anything, you probably shouldn't, because then, more liquidity for the rest of us to target on the order walls. So that's my 2 cents on, you got to be very careful with the strategy because it is very unorthodox. This is not a common thing that you'll probably be told in most, market classes or trading 101, which is good. Because things that you're told in Trading 101, I think will probably fail in the long term. Because if you don't find your own edge to exploit other traders, I don't think you'll be successful in short-term trading anyway. Okay, that was a little bit pessimistic, but true. So yeah, I don't really see any large bid walls or large offer walls that price is really heading towards. I would love to see some just like massive bid wall or just some massive offer wall just like come up like a massive offer wall, so massive like large limit sell, and then Bitcoin rises, then all the altcoins rise, but then one altcoin can't rise because it's hitting an offer wall. Then I can buy it on camera and show you guys how it works. But that's not happening right now. However, I will flip the screen to something I want to show you guys. Let's see if I can do it on OBS. Where are you? Perfect. So this is the coin that I've been doing this the most often on, which is Alice Perp. And what I've noticed many times is that Alice will continue to just, try to hit one bid wall or offer wall, and then it will just burst right past it. And that's a strategy I've been using, and I'm kind of trying to show you what that looks like. I think this may have been one of them. It's kind of hard to see, but if you can see here, it's just like price keeps hitting that same price point. You see right there, and then finally it just comes right through. It just sells off quickly like that. So we have like probably, actually I wouldn't say, because there's no large volume here. If there was large volume, I'd say that was definitely a large wall, but I don't really see it. This might have been one of them though. Oh yeah, this definitely could have been a large offer wall. This has all the makings of one. Exactly what I'm looking for. This was for sure. You can see what's happening here is you get the same high every single time here of 17.96. 17.96 kept getting hit, and then eventually when it was filled, everyone's stop losses that were above that offer wall probably got triggered, probably not that much liquidity, and price bought right back up. So that's really how targeting a large offer wall could have worked very well, right here. But I don't know for sure, and I do prefer targeting bid walls. Now, when I say targeting bid walls, what I mean by that is shorting into a bid wall and then trying to buy lower instead of trying to buy into an offer wall and then sell higher. Both can work, but I find that targeting bid walls tends to work a little bit better. I think the reason why is because the stop losses of longs are probably more prevalent than stop losses of shorts because of the spot market. Even though this is a perp, I think that on secondary spot markets with many traders using stop losses, I think just selling into bid walls probably works a little bit better. So so let's go look for any other examples. This one might have been one too. Oh yeah. Yeah, this does look like a fair amount like one. So this looks like price, if you can see here, it kept hitting the same price. That's because this was probably a bid wall that may have gotten shifted. And then when the bid wall breaks, price just collapses. And basically what I would want to do is I would wait until the very last of that liquidity is being sold off. I would sell on that bid wall, not by using a market order, never use a market order, by using a limit sell order. So a limit sell order, not trying to be filled, like someone buying me, but if there's a large bid wall at 47, I will put a limit sell order at 47. So that means that my limit order will work as a market order, but at any price above 47. I hope that makes sense. Basically, it's a limit order, but it will not sell below a specified price. So if you put a limit order at 47, what you're going to do, if it's not post only, is you're going to sell every single amount of liquidity that's bidded above 47. But you're not going to be selling anything below that. And that's what you want to do. You definitely don't want to hit market order. That would be bad. You want to specify where you're selling or buying if you're doing the opposite. I can show you guys an example of that. I hope that there's a large bid wall. Let's go check. Let me check by flipping the thing. Is there a large bid wall on Alice? No, I don't really see one. I'm thinking like, hey, maybe at around 18.8, but no, on Alice, it doesn't really look like 18.8. It's even like that much of a large bid wall. Any large bidder offer walls? No. But yeah, finally, this can work on smaller coins and it can also work on bigger coins. So I have seen this on Bitcoin, Ethereum, and FTT. Bitcoin and Ethereum, this can work on. It's just that those are such massive markets that I get really kind of antsy about that because Bitcoin has so many different factors and so many different markets and so many different things. But if you see this beautiful opportunity of something like this, looking at the depth chart, and you see Bitcoin is $100 lower on every single exchange except for FTX. And FTX seems to be selling on a bid wall, selling on a bid wall, selling on a bid wall, and price just can't fall. If you're one of the last sellers on that bid wall, price will probably just tank right down to parity, meaning at an equal price point of other exchanges, and then it will continue trading normally, such as it would with other exchanges. And how you take advantage of that is selling on that large bid wall. When it breaks, and then just putting bids, limit orders lower that will get filled as price breaks and hits stop losses and slippage and thin liquidity. That's a beautiful example that can make you a fair amount of money pretty quickly, especially if it's like, let's say there's 20 Bitcoin left on a large bid wall, and the bid wall had like 2,000 Bitcoin. You sell 20 Bitcoin, and price falls like, let's say $50. Then if that works out, then you make $1,000 before fees, because 20 times 50 is $1,000. So, however, you just have to make sure there's enough liquidity selling off that your buy orders will be filled. Finally, final thing I need to talk about is risk management. This is a risky strategy, not gonna lie. And because it's a risky strategy, you need to be able to know when to hold them and know when to fold them, as the saying goes. If it seems like a wall has just been sold off, or a bid wall has just been sold off and the price just rockets up, you should probably get out of there. There are going to be plenty of other strategies for you to make a fair amount of money fairly quickly, but the most important part is capital preservation. And taking a 0.5% loss is not the end of the world. You can probably make that back on like 2 or 3 wins if you do this, or maybe even 1 win or less. So definitely capital preservation is very important. And also, if you want to be even more careful, what you can do is place some bid orders right below that large bid wall that you're selling on, so that the very second that the wall breaks, your bid orders will fill. But if you do this, you want to make sure that you have a position, because if you don't, then you're just naked long. Then you're just opening long, which doesn't really make sense, because this strategy is more targeting a wall and then closing on the other side of that wall. So yeah, but also I talked a lot about selling onto bid walls, but you can also do this by buying offer walls. Remember, you just have to flip everything. So if there's a large offer wall and every single thing, like Bitcoin's risen, everything's rising, Lord's rising. If everything's rising except one altcoin's not, because it's hitting that offer wall, then buying that offer wall and putting your own limit sell orders higher is probably a good strategy to get, that nice scalp profit. That's going to do it for this video. Unfortunately, there were no large bid or offer walls that I see. But of course, I will be doing this off camera. I will be scalping and looking for walls that I can try to target because I want to do that. With that, I think I might get a lot of questions about this one. I think this is a very effective strategy. If you don't, cool. If you do, cool. If you have any questions, ask me. Happy trading.